Good morning, team, or afternoon, should we say. Hope you're all well. It is me on my lonesome for a little while, and Diogo's been unfortunately delayed, so he'll be joining us soon. Just waiting for him to come and jump on now. What I'll do whilst we're waiting, before we get into the nitty-gritty of what we're looking at today, is I'll do a bit of forecasting on kind of dollar and Euro USD, and we'll have a look at that. We'll have a look at gold as well, see what gold's up to at the moment. I'm not trading gold as much at the moment, just because of where it is. I don't like trading at all-time highs. It's quite difficult to know when the market's going to reverse on you. The smart trade ultimately, and let's just jump on the charts and we'll go through it together. The smart trade ultimately is, of course, the buy right now. So if we have a look at gold and what gold's up to, look, that's the monthly candle. Don't really need to say much more than that. Okay, we are got 7 days left of September. Huge monthly candle. Obviously we've got nothing to the left. So it's just a case now, if you are trading gold, of that the amount of people that will be trying to short it now because it's all-time highs, who are just going to get liquidated over and over and over again. As I always say, the market will tell you when it is ready to go short. Right now, it is not ready to go short. Let's do a little bit of forecast, a little bit of analysis on it. Let's just have a look what we could expect. So obviously, as you can see, we've taken out the weekly high already. That's not really a surprise. So I'll mark that on, dead weekly. Our monthly was taken back down here, so we can mark that on. That was ages ago now, so that's our dead monthly. Have a look at our daily weekly chart. Let's just draw on our levels. So we've obviously got this level down here. I'm not too fussed about the bearish levels at the moment, just because of where price is ultimately. And then of course we've got our daily. Let's have a look at our daily. So again, we've taken out daily and weekly level already. We are only a few hours into Monday, and we've taken out the weekly high already. So look, all in all, so I trade ranges ultimately. This is difficult market conditions for someone like me to trade in. So the last range that I had was here. Okay. Price pulled back into the 50% and then shot right off. So I'd have been getting into kind of here. Ultimately, I've been jumping into there and trying to, get into longs up here. So if I look back at this level here, so we had that news event, big news event. Was that FOMC? I think that was FOMC, wasn't it? The 18th, yeah. So FOMC, so that was our FOMC move. It delivered price down to the 50%, which is what we expect with gold. So when gold is on a bull run, we expect it to pull back into 50%, but not much deeper off the previous range. So that's my expectation, which it met, as you can see, back into that 50% level, which is there. And if we draw on our fib from our low to our high, there you can see it doesn't quite get it, but it's good enough. Okay, into that 50%, and then obviously bullish price action ensues. So you could have been getting in. So I probably wouldn't have been trading much of this messy stuff. You might have got some shorts down in here, but you've got to appreciate they're not going to be long-term moves, of course. I'd have been waiting and banking on these these bullish moves coming back in, and same principle applies. We look at our ranges, draw on our fib. So you got a fib from the low to the high here. Okay, down into that golden zone. So a little bit past for 50% down to that golden zone. If you come down and do the whole range down from here to here, you can see again another tag into that 50%. So it's all just numbers at the end of the day, guys. And when price comes back down into this sort of area, we're then looking for potential longs from there. So if I was trading gold right now, looking at gold and looking at the momentum of gold right now, it's Monday, so I'd probably just be watching and waiting for a little bit. I'd be looking for some kind of trend to develop of some kind. If I was trading it right now, I would be taking it long. So I'll be long in the marketplace like that. And the way I'd be trading it right now is I wouldn't be holding for very long. I'd be getting in and out of the marketplace. So the way I'd be trading it is like, let's say if I took that position, I'd be taking my profit off at the external. And then the next trader would have taken, for example, there, I'll be taking my profit off at the external. So the external liquidity of the range that we're currently in. So that's the range that we're currently in from the low to the high, for example. We've had that pull back into 50%. So I'll be taking my profit off there. And I'd be just taking chunks out of the marketplace over and over again. I could be in and out the marketplace, 1.3, 1.7, not really fussed about my RR. I just want a consistent profit based upon the market conditions that we're in. this market is primed to reverse on us at any stage. It can go at any time. So it's not really a case of, it's a case of where it's going to reverse from. Sorry, I meant to blank then. The case of where it's going to reverse from rather than when it's going to reverse. It is going to reverse, okay? So that's one thing that is a guarantee. Like anything in life, none of these market cycles last forever. Just like it pulled back here, that was only last week, okay? And, we had this kind of ranging price action here. But right now, it's pretty simple. I just would not be shorting it right now. And if you look at, if we look at what I'm looking for, I'm looking for market sentiment. Okay. So we have a look at market sentiment on, how do I usually use for that? Let's have a look at FX Street. Okay, and we try and find gold, market sentiment, gold. Okay, look, 69% of the positions right now are towards the short side. Okay, now this is a really good way to get yourself into the right side of the marketplace. If you see the market is heavily loaded one way, most of the time they're wrong. Okay, look at the numbers. Okay, we all know we're trading, 95% of traders fail. That means that other than the people that are holding these positions short for a long-term basis, the chances are that most of these people that are short right now are incorrect. Okay, and it's the smart traders that are trading it long that are going to ultimately make the money. So that's where you want to be really paying attention to, where the market is, whether we have more buyers or sellers in the marketplace is a really, really good way of you getting it on the right side. For example, if I look at this chart and to me it looks bullish, and then I go to my market sentiment and I can see that my market sentiment is, severely bearish, then, ultimately it gives me a really clear indication that, we're probably going to continue long. I'm not sure if you can see that, guys. Just give me 2 seconds. Let me see if I can share it with you. I'll share because I'm not sure you can see my Forex book there. So so this is the market sentiment, right? Okay, so at the moment we've got 69% of people that are short on gold and 31% of people that are long. So what that indicates to us is that usually if we have the market sentiment higher on one side or the other, then it's usually an indication that they're going to get liquidated. Okay, the big players will see all of that as liquidity and they will consume that. Okay, it doesn't mean that it's going to last forever. And sometimes these market sentiments will be something you can trust and you can rely on, but usually just at turning points. Okay, and what happens then is, and I'll just jump back onto my chart.
Hey, Chris.
Hey, dude, how you doing?
Doing fantastic. How are you, man?
Yeah, I'm good, thank you, man. I'm good. So what usually happens is we have a reversal where the market sentiment is correct, and then what happens is people start longing, and then longing, and then longing, and then longing. Okay, and they all get liquidated, and then there's another reversal. Okay, and then people start shorting and shorting and shorting and shorting, and this is how you can use the market sentiment to really get you on the right side of the marketplace. So yeah, long story short, gold long. Don't do anything else. You'd be mad too. You'd be mad too, wouldn't you?
Yeah, that makes sense. Yeah, my bias hasn't changed on gold. Still
No.
Dollar's still bearish, short term.
I was just saying it's difficult to trade at the moment, right?
Yeah, I'm not.
It's difficult to get in a position on gold.
Yeah. I can't trade gold. It just doesn't respect my strategy, so
No.
I don't really trade it. So
no, fair.
But the bias is very clear. Funny because I can see the bias being extremely bullish short term. Yeah, I can't trade it. I just know not to trade it.
No, yeah.
But yeah, you got gold on lock, which is fantastic. It's a wild beast. I'm jealous.
How's your trading week last week?
Oh, it's been really, really good, man. I'm so excited. Yeah, the traders in the community as well, they're excited because I've added a new addition to the strategy, and
cool.
They're just smashing it now. I can show them. I took 4 trades 1 loss, 3 wins. Amazing.
Nice.
Pretty decent for now. We'll see. How's your week been?
How was my week last week? Yeah, it was good, to be fair. Obviously, I didn't really do much pre kind of FOMC, just because, I wanted to see, what that news was. Obviously, we had a 0.5 rate cut, which is pretty impressive, which didn't really have the sort of impact I expected it to have, I'll be honest.
No, normally these things, it takes a while, I think. It takes a while. Even in the crypto market, it takes a while. Everything, it just takes a while. I can't remember the last time I've seen a major news release get released, and then all of a sudden it just goes in one direction for weeks on end. It doesn't really work like that, to be fair.
I think because we already knew we were having a rate cut anyway, it didn't really make that much difference. It was just, obviously we were expecting a 0.25 rate cut. We got a 0.5, which is great. Well, not great for the dollar, but great for us as traders, because it's just reinforced the dollar going bearish, and that really is just the outcome of it, is that it's a bearish dollar. So if you're trading Euro USD, GBP USD, go long, as a long-term perspective. And if you're trading USD, USD CAD, go short. I mean, there's not really much other to it than that. It'll be interesting to see how it develops over the next few weeks, though, surely.
Yeah, 100%. I can't. Oh, I'm so excited. I miss trading. I really, really did miss it, man. I love it. I'm back in it. Nice. I'm excited.
I love it. Right, go on then. Jump on some charts. So show us what you took last week.
I do, but yeah, I'm just realizing I got excited there, but that's not the reality. The reality is, if you take some wins, I'm taking a week off because I don't want to get overconfident and start, doing stupid stuff. So yeah, just one of those things.
You taking this week off, are you?
I'm gonna manage a trade that I'm in now that I've been holding since Friday, and then I'm going to be extremely cautious with my trading. Because normally when I have a really good week, I can easily take a loss or two at the start of the week, and it's just not worth it. So I'm just kind of staying sensitive. I get nervous when I take a few wins, more than when I take a few losses. When I take a few losses, I'm cautious. I review, then I know what to do. But when I'm taking a few wins, I'm like, this, it's
make you a bit hungry, can't it?
Yeah. So I'll have to be a little bit careful there. So yeah. Where are we at? Give me 1 minute, and I'll be back in 1 minute. I can hear my wife in the back.
So those of you in the chat today, we've got 26 of you on, which is great. Thanks for joining us. We want lots of questions today. It'd be lovely to have lots of questions from you. Lovely to hear from you today. Charts you want us to look at, how your trading week's been. If you've got any questions for us, you want us to kind of analyze particular things for you, then that's what we're here for ultimately. So speak up in the chat. If you're in the chat, come say hello to us. Come drop your questions, and we can jump on any charts that we need to. I'll just show you a trade that I'm in at the moment, just to kind of go through that with you. So some of you may have been tricked by this big bearish move today on news. And one thing you have to remember with news, and we discussed this the other week, is news will do one of two things, okay? It will either push the market faster in the direction it's already going, or it will sweep liquidity points in order to fuel the direction that it's already going. That's literally the news's sole purpose, that injection of liquidity into the marketplace, especially when we have these injections of liquidity and big moves early, is great for us as traders. Now, lots of you would have seen this bearish move and you'll be thinking, right, that means that Euro USD is going short. That means the dollar's going long. But this is where you have to be really, really religious with your higher time frame perspective, okay? Because if you've got a really clear higher time frame perspective, so if I'm looking at my charts and I'm saying, right, well, the dollar is very clearly bearish. All of the news that's coming out at the moment is clearly bearish. The ranges that I'm in are bearish, and we keep pulling back to take out higher prices, but then immediately push down. For me, it was just a case of seeing, well, this for me now is much more likely to be a trap more than anything else. So I'm looking at this, I'm zooming into my chart, and I'm having a look where I can get into the marketplace. And for me, it was a really simple. So this is the the same setup we spoke about the other week, which is that news reversal trade. So we're either going to have one of two things. We're either going to have news taking out liquidity and then reversing on us and giving us reversal patterns that we can jump in on, or we're going to have news pushing past the particular point and then generating a small pullback to then fuel the move further on. So for me, I'm heavily bullish on Euro USD for all the reasons that we discussed. For me, I'm heavily bearish on the dollar for all the reasons we discussed. So this push down for me was great because I saw this massive injection of liquidity. If I look at the dollar, and be like, right, we're taking out all these liquidity levels. We've tagged into kind of imbalances up here. We've taken out more liquidity above there. And, the move is then ultimately exhausted pretty quickly. So the news came in at 8 o'clock and it was exhausted by 9 o'clock. So classic 30-minute window that you've got to decide what you want to do. You wait half an hour, okay? And, you could have got into some really nice shorts there. If you've been quick on your feet, you could have got a short out of that. But by the time you'd moved off and you place yourself a safe stop, you'd have probably got in only 1 or 2 hours out of it anyway. So not really the sort of trading that I'm looking for. It exhausted itself by 9:10, as you can see, and then we started getting this bullish pullback. So bullish momentum coming into the marketplace, these higher highs being made, higher lows, higher high, higher low. And then for me, it's just a case of I'm going to jump on that trend or that momentum, and I'm going to trade this back up to the trap level. So that's my trap level. This target, which we're very near to hit as well, be taking off like 90%. It's Monday after all. I don't need to be greedy. I'm at break even on this trade. It's not, I don't need to, force a 4-hour trade out of the marketplace right now. The likelihood is we'll probably get it, but the amount of times I've said that to myself, and my trade's gone to say 1.8 or 2R, which is kind of normally my first target. The reason why I've reduced that slightly is just because we're coming into another area of liquidity. So I might see a rejection from here. And again, it's Monday, guys, right? I'm not in a huge rush to take loads of money out the marketplace. This will give me a nice kind of 1% trade out the market. And look, that's all I'm looking for a day. 1% a day, keeps the prop firm failures away, as I always say. So, that's all you need. Just take a little bit out of the marketplace all the time. 0.5 or 1% is perfect. If you can do 0.5% per day, if you can do on, a $10,000 account, if you can do $50 a day, and this is half the problem with traders, is you look at $50 a day, right, and you're like, oh, that's not enough. Look at $50 a day, okay, $50 times, say, 5 days a week. You do that over, say, 4.5 weeks in a month. So you've got $250 per week coming in. Someone's going to have to do the maths for me. 250 times 4.5, 4.5. Okay, so you've got 1125 coming in. But when you look at that on a percentage basis, okay, when you've got 2.5 coming in and you times that over 4.5 weeks, if you could do that every day on average, you're actually turning around 11.25%. So that means you could pass a prop firm challenge every single month. And then, people always forget that. They look at $50 and like, that's not enough. Okay. But imagine now that's on a $100,000 account. That's $500. Okay. And you're doing yourself 11 grand a month. So you don't need huge profits in these marketplaces. And that's why, for me, I've gone from, my trading strategy's gone from shooting for these kind of 6R trades all the time to, do you know what? If I can get 1.8 out of that marketplace, I'm pretty happy. So, for me, Euro USD is long right now. I'm in a bullish 4-hour range, which is how I trade. So I trade primarily ranges, as you can see. I'm in a bullish 4-hour range. Just get rid of that level. Bullish 4-hour range. I've had some pullbacks into kind of my discount area, which is my discount down here. I've had liquidity taken and rejected. So I'm seeing that the liquidity on the sell side, and that's a really important thing to look out for. Where is the liquidity being generated that's then causing extreme moves in the marketplace? So ask yourself, when you're looking at a chart, and let's say this, it's not really clear. I've obviously got a bias from down here, but it's not really clear where the market is headed. I'm just going on the basis of, the fact that we are bullish and therefore we should continue bullish. And then I'm looking at kind of monthly levels. We've got a monthly level up here and we've got another monthly level, I believe, up here as well. So we've got a couple of monthly levels that we can pay attention to. that are really key major levels for us to look at, some monthly major levels, however you want to call them. So for me, I'm looking at this and just like, do you know what? It's just a case of just watching and waiting now and waiting for this to push higher, because every time I take out some sort of sell side liquidity, I have an extreme reaction. Look at the sell side liquidity being taken and look at the reaction it has. And, that for me is a real clear indication that, we did have this bearish pullback here. We did have a shift in market structure coming down here. But very quickly, it's resumed its bullish momentum. So, it's just a case of following that. Trading at the end of the day is, there is some kind of guesstimation in there, right? We've got to kind of assume where we think price might be headed. So, if I'm looking at this marketplace, whilst it's not 100% clear and there have been clearer market conditions like down here, for example, I'm looking at this thinking I've resumed my bullish trend. For me now, it's just a case of just holding long. So that was where my bias came from. We're getting kind of New York liquidity coming into the marketplace. So we're getting a bit of a pullback here, which is cool. I'm fine with that. At the end of the day, if I get a break even, I've not lost anything. So it's a bit whatever. So, that's my target. I'm not going to change my target. Obviously, my final target's up here. I'll leave a little bit on for that. I'm not going to change my target despite this little pullback. I expect we might have a bit of a pullback. Maybe take out some liquidity to the left and then obviously push higher. So, that's kind of my forecast on this. And, it's just in line with my overall market consensus that, the dollar is weak at the moment. Therefore, Euro USD is likely to be long. We had some bad news for Euro today. Okay, the news reports were bad, but ultimately, overall, we're bullish. So that news had a short-term impact on price. We've now had a reversal, and that reversal is hopefully taking it to the trap zone. On dollar, we're pretty close to the trap zone already. So, that would definitely be another profit target for me. Got alerts set here as well. So we're just kind of watching and waiting and, letting price do its thing ultimately. Dollar's a little bit less clear because we've had some, so this is what often catches people out, okay? So if we look at our time frame structure, okay, that's our higher time frame structure. A lot of people look at moves like this when they're in this state and they're like, right, that's a bullish change of momentum, okay? That means that we're going to be going long. The problem with that thinking is that it is on the higher time frame. It's not valid. Firstly, it's just pulled back into a premium area. If you look at it from a lower time frame perspective, and we draw on our structure on a slightly lower time frame, okay, you've had a pullback, but we've discussed this before. That is not sufficient for me to assume we're going to be going long. In fact, for me, all my assumption is that that is just a pullback to take liquidity to then go short. So for me to assume that we're going to be going long, what I need to see is that high being taken out. Now, if that high gets taken out, now I could assume a bullish stance. And, I definitely take a long from there, for example. But right now, this one pushback, and that's what I think a lot of people look for, is they're waiting. So they ignore all this bearish price action, okay? And they wait for that one big impulsive move. And they're like, right, buy. And they get stopped out over and over again. That's failed to make a new high. That's failed to make a new high. This push was only caused by news. So it's just a case now of just kind of waiting for price to come down. So, that's kind of where I'm looking at it. Whether we pull back like this, generate some liquidity further and then break through, maybe that's an option, of course. Where we go on dollar is obviously a big question mark, but, this week should tell us a lot more. But, look, the consensus is that I'm short on the dollar. The news has been particularly poor for the dollar. We know that the US economy isn't particularly great. We've got the election coming up as well, which will be an important turning point. If Trump gets in, that could be positive for the dollar. If he doesn't get in, that probably is going to be negative for the dollar. So, that's another turning point we've got to watch out for as well. But right now, I'm not going to be shorting this marketplace. And certainly I'm not going to be taking shorts from here. If I was going to be taking any shorts, I'd be waiting for some sort of structure, waiting for some bearish structure to come in. Because again, that same move there, that's only a valid move if we get new structure from it. Okay, if we get new ranges created from it. So until that happens, it's just a case of watching and waiting and assuming that we're still bullish until we're not. Simple as that.
Cool. Bang on. That makes sense. I also agree with that analysis. Euro longs for sure. It's crystal clear, especially if all the liquidity is taken out. It's not bearish, though. Yeah, it's got a while for it to grab the bearish scenario liquidity.
Yeah. Oh, sorry, Diego, can't hear you.
Hello.
Oh, you're back.
Can you hear me?
Yeah, you're back.
Okay. Yeah, have you got any trades planned apart from managing that Euro trade?
No, just that Euro trade. Yeah, I only really, unlike you, I only really trade kind of 1-2 pairs really. Euro USD usually keeps me busy enough. You know, I'm looking for my lower time frame moves. I'm kind of getting in and out the marketplace, and you know, being done with it really. So yeah, just a case of watching and waiting that Euro USD, and then probably needs a bit of development. That news move today was a bit of a gimme. If it wasn't for that news move, I doubt there would have been anything for me to trade today, if I'm honest.
Fair enough. What was the news? Is it Euro related or?
Yeah, it was. What was it? It was manufacturing stuff, I think.
Oh, okay, so it's not really like a red folder event.
It was just real bad news. Yeah, so it was flash manufacturing, PMI, and it was just all red. So the German, French, and the flash manufacturing PMI, and it was all red. It was all below the forecasts.
Cool. Fair enough.
Yeah. And yeah, that's another indication that the news has little impact. That, you know, push the price down for like half an hour, right? And then it just returned on us almost straight away. So
yeah, it's all they know where they want to get in. They want, you know, they'll somehow, I don't know the full mechanics on how it works, but the big boys, they want to get in at low prices, so they will, the numbers will be bearish. I don't even know if the numbers are legit. How can you prove it's legit? See, I don't know.
Yeah.
But just imagine, right? I wouldn't be surprised if the numbers are fake. It's just so they can push price down and get in at lower prices. Who knows?
Yeah.
Right? Like a lot of things that we know is fake and there's no proof to back it up. Anyway, I'm just that's what I think. I don't know. It's just weird how technicals always gets you the entry in the direction, yet news will be bearish, but yet you're bullish. You know?
Yeah.
If it was bearish news, it should continue going bearish, but all manipulated anyway.
That's it, baby. Look out for that manipulation.
100%.
And that, you know, that's the biggest question. Is it manipulation, or is it a change in direction? Is it a change? And I think this is a way to build a bit of a story, right?
Yeah. Could be a bit of both, 100%. All right, let me change. I always lose my window. What would everyone in the chat like to see today in terms of analysis? Have anyone got any questions? I want to make it interactive. We can get the ball rolling.
If you got any charts you'd like us to have a look at today, guys, we'll jump on them. We'll do some analysis for you. I'll have a look at kind of higher time frame view with Diego's analysis. I can look at a kind of a lower time frame view with my analysis. I always wonder if some people, like, they're not able to comment.
Yeah, it's
people probably that scared to comment, surely.
Yeah. Is everyone watching from their phones or from a computer? Type in 1 if you're watching through your computer, and type in a 2 if it's from your phone.
Let's just see if we can get some answers. So we've got 50 people watching today, which is great. Yeah. Thank you for joining us.
Because if nobody's if they can't comment, there must be a reason for that. And I know there's always a little delay when it comes to but it's probably a 15-second time or a 60-second time, I can't remember. But yeah, type in a 1 once you hear this message. Computer at work. No, lovely, nice one, Lawrence. Just to repeat, type in a 1 if you're listening from a computer, or 2 if you're on your phone. Lawrence says, "Geez, he's at work and he's like, I'm at the live stream." It's weird that nobody else is commenting. Maybe it's a YouTube thing where you can't comment unless you have to like sign up to YouTube or to your YouTube email or something, and then you can comment. Maybe it's that.
Shall I try and go into it and see if I can comment?
Yeah, but you might be automatically signed in as YouTube. A lot of people probably aren't, I would assume. Because when I want to comment and I'm on different emails or whatever, I sometimes can't comment on a YouTube video and I just can't be bothered. So I just won't comment. Because it's asking me, for the logins and the password, and it's just a hassle. So I can get it if other traders are in that same boat. There we go. Look, see, Lawrence, it does say you need to be subscribed to CTI to chat. Yeah, all right, guys, you need to subscribe to CTI.
Make sure you subscribe then.
Yeah, you need to be subscribed if you wanna comment and chat. That makes sense. I knew there was a little friction there.
Okay, and also, so I think this is what it is. So it looks like most of the viewers are on other platforms, because on YouTube we've got 4 viewers.
4 viewers, okay.
And I'm one of them.
Interesting. Okay, so and what's the other thing? Facebook and X.
Yeah.
And obviously, if you're on X, you can't really comment unless you're on YouTube.
No.
So who is on X, by the way? How many of you are on X? Type in a 3 if you're on X. It's just good to know these numbers and just to work around with it. It's crazy. Literally just you and Lawrence can comment. So the rest are probably on Facebook and X then.
Yeah, I think so. See if we can get in on X as well.
So yeah, type in a 1 if you're in the computer, type in a 2 if your phone, type in a 3 if you're on X.
Can't comment on. Oh, hang on. You can comment on Twitter as well.
You can, yeah? Oh, interesting. Oh, fair enough. Maybe on Twitter, yeah.
But it doesn't look like it comes up in the chat that we can see. Oh no, it does. It's right at the top. So yeah, we got 50 watchers. 50 watchers on X who are refusing to talk to us, which is very upsetting for us as hosts, because we'd love to speak to you, please. So if you are on X, come say hello to us now, because there's 49 of you. I've just seen all of you. I've got all your names and I know where you live. So just be watching out, okay? I'm going to be coming forcing Forex analysis down your throats. But whilst we're waiting, I'll keep nudging people along. If you are on X, just pop us a message. We'd love to be able to interact with our. It looks like most of our followers on it. There we go. Diego's. Oh, Diego, you're one of the hosts. Diego.
Interesting. Hello.
Yeah,
so most of everyone's on X then.
Yeah.
Interesting. Yeah.
And they're not talking to us, so I wonder why.
Yeah. How do we repost the live on X then?
I don't know. One for another day. Why don't we jump on your charts and have a look at some of your. Should we go through a couple of trades for last week and then a bit of analysis for this week? Yeah,
let me do that. Okay, I think I just repost. I'm just testing his X. I never really. Did I just do it? I'm coming. Okay, there we go. I reposted it on my profile. Okay, cool. All right, I'm just gonna just. Fair enough. All right, let's start. Where we at now? Okay, it's good to know. Everyone's on X. Boom. I knew it. Yeah. Boom. Share my screen. Share screen. Window. DXY. Okay. So DXY. What am I expecting on DXY? Let me just cover last week's trades because I had a really good week. Then I'll cover my bearish bias on DXY. So I'm going to start with cable. Cable, this was a pretty decent trade. So I got involved on the stop hunt of the trend line below the previous session low. The entry is, I'll cover that another time. But the bias on cable is obviously bullish since I'm looking at bearish dollar. And if we zoom out in terms of what I'm expecting on the higher time frame with cable, is that we're trading above this trend line. Well, this is done now, but at the time I had this. Go to the H4. In terms of Elliott waves, I had 1, 2, 3, 4, 5.
So why is your 2 in the middle there when it hasn't touched?
Which one? My 2?
Yeah.
Because they both touch in the trend line.
Oh, okay.
Right. So it's only when a new tap of the trend line, a new fake out of the trend line is formed, then you can identify a new Elliott wave 4.
Right. Okay.
So at the moment, we are actually hovering in Elliott wave 3. But what could easily happen is if price doesn't react from this EW3 and goes towards this trend line as a target, it can still range and move around this area before dropping to the downside. Right, so we're still trading within the EW3 range. Right, we're still in there. But what could also happen is price could still potentially make a new high, and you can update the Elliott wave. But we're still trading in the direction towards this trend line. We're trading towards where the old Elliott wave 2 is to target. Watch for the liquidity on the left. You can see there's all the points of interest here, and you just be targeting these areas as your booby traps or whatever.
Yeah.
And once price does liquidate those areas on the left, and you can apply the Fibonacci and whatnot, then you can apply Elliott wave 4. But for now, higher time frame, we are still hovering around this Elliott wave. But regarding this current middle pattern, that is what I was also interested in. So we zoom out real quick. See what else we have. Okay. You can see there's liquidity here on the left. That is my target, right? This particular target, that is what I was targeting on this setup that I found just before. What was the news? Was it FOMC?
FOMC on Wednesday, yeah.
Last week, fair enough. So that was my trade. And where was my entry now? There we go. So I was targeting that high. And that's more or less where I came out. Got triggered in. And then came out just before. But now I'm expecting it to go further north, to be fair, because of the DXY. But now there's an update of the trend line accordingly. But now is also to expanded, meaning the setup is invalid in terms of trying to get involved on a new trend. But before I do that, I'm just going to separate the pattern, focus on this current pattern. This liquidity has now been taken out. That's done. But now I need to correct the pattern and apply the same concept and wait for a new fake out of the trend line. But before I do that, I need to correct the pattern into the new structures and the new Elliott waves. The same way that I called this trade, I'll do exactly the same thing once the Elliott wave is confirmed. But you still need a checklist and everything. I've still got my checklist. So 1, 2, 3, 4, and 5. Same thing, literally exactly the same thing. Remember that Elliott wave 2?
Yeah.
2 taps, expecting a fake out, and 4. Also 5. Once 5 is complete, then the same concept. You've got 2 taps of the trend line, 1 and 2, expecting a fake out on the 3rd tap. That's all it is. 3rd tap fake outs of the trend line and the Elliott waves. And once that happens, then this new Elliott wave might be updated if we do get a reaction of that area. But what I'm going to do is just focus on this current pattern, because if I look at it, of course, there's London, New York has just opened, previous daily low is here. So there's definitely no longs for me to get involved in. Right? I need to get involved in below liquidity, and there's liquidity right here. So that is where I'll be personally anticipating price to liquidate. It's going to be below this liquidation, below London, below the previous daily low, which is obviously this range here, this gray line. There's lots of confluences for price to go long there. So that is what I'll be expecting. Then I'll change my bias if price allows me, and I'll look for an EW5 fake out and look for a short. And I also, still apply the same logic with this fake out of that trend line on the old EW3. So every single Elliott wave is always being updated and moving along until the main reversal occurs. So this was an old EW5, to be fair, right? But that's been updated. All the patterns have been updated. So you extend the Elliott waves accordingly. So that was a nice little trade. So I'm still bullish on cable. Nice 2.7. The other trade is another one. on a separate account, but this was great. Same concept, third tap fake out of the pattern. I went into great detail actually with this one on live stream. I posted it on the Discord. 1, 2, 3, 4, 5. But prior to that, this is what I saw at the time. This is where I got triggered. But the reason I was bullish is because this major liquidity area here and got liquidated. Just before that, you need to kind of understand the story. Where we are. Like for example, again, it's all back down to liquidity. So you've got this area of liquidity. Where is the low to that? It's here, right? Now, these are just basic stuff, but for those of you who don't know, you can see you've got this range. So I don't like trading within a range. I like trading outside of it. So just such as here. So with this example, you've got your, what's this, H4 out of a range. Once the liquidation's been identified, then I know this is bullish towards this area. But then everything that I covered there, I would apply the same logic but on the other time frame. So once the liquidation was actually complete, right, you've got this H4 range, liquidation's been triggered, New York took out London, New York took out this H4 low, then I just apply the same concept and just look for your patterns on that time frame. So let's see if there's any setup there. There we go. You see that fake out? Nice little fake out there. Just as an example. Entry below a point of interest somewhere on the left. Target the start of the pattern. This is just on the lower time frame though. But it's the same concept. It's all fractals anyway. 1, 2, 3, 4 triggered. And then update the pattern, and then you look for longs wherever it's going to go, etc., etc., etc. You just keep on buying it towards where you're expecting price to reverse from. Yeah. Right, and then obviously you can, if you want, it's completely up to you. You can look for your shorts within that point of interest, but then you know this is going against the trend, right? So even if I were to catch a trade here, it's definitely a very low probability for many reasons. One is against the trend of the liquidity, and 2, it's still within this previous New York session. 3, it's at 3 in the morning. 4 is on Friday. 5, there's no liquidity on the left. There's just no traffic. So if it is going to react of an area, it will definitely be above here with this liquidity. So this particular short is a trade I won't take. Right, let's just see how it plays out. Okay. Wait, what happened? Was that a stop loss here? I don't know.
Yeah, that would have got you, I reckon.
Most likely, yeah. But now that this particular pattern has been updated, but now you can extend the pattern into a more larger, redefined pattern. The bigger the pattern, the higher the probability, but not too big of a pattern. It has to be at least 1 day's worth of data is what I like. So now here, fake out. There we go. This is what I'm talking about. There's a third tap fake out. We've got 1, 2. You've got 2 taps of the trend line. 3, 4, beautiful fake out. Then you go even 1 step further and you look for your confirmation pattern. And you apply the same concept, the same logic. 1, 2, 3, 4, 5, EW5 entry. Nice little trade there. Most likely below there's liquidity. Perfect trade. Get triggered in here. Your stop loss, that's a different story, but let's just say you put your stop loss below this low, right? Again, that's a nice little trade. I normally just hit my set TP at 4.50 and I just leave it. I miss a lot of these trades, but I don't really mind. I mean, this is news. That was a great trade. But yeah, that was a nice little piece. But look, trying to sell it, you're going against the trend. When you buy, you get these moves. So you need to understand what is the trend. Has the range been taken out on the H4 or not? So if we go to this particular scenario, what was I expecting? Well, there's this major swing low, there's this major swing high. All these areas, they've already been liquidated. Here, etc. Even up here. They've all been liquidated, but this hasn't. This hasn't. So now the trend is bullish towards this area. So this is what kind of gave me the bias plus the DXY and everything. And this is where I managed the 4.3. Could have held it throughout the news, but my TP got hit. It ended up going to 13, but I'm very happy with 4.3. Right, 4.3 was approximately there. So that was another nice little trade. In fact, I done a live stream and I covered everything in great deal before FOMC, and it played out to the T. This was plan A entry, and plan B was actually down here. I literally covered this in great detail, and it played out exactly as anticipated. So that was fantastic. That was the euro. And what happened here? Same logic, same thing, but this time it was a loss with this particular trend line and the liquidity and all the checklist. But after reviewing, this was a full 1 hour loss. It was very, very quick. After reviewing, the mistake that I did was that I missed this trend line. And I just missed everything. I think I must have been rushing it, or I was distracted. But yeah, this was a 1 hour loss. And with this particular entry, fair enough, that was a 1 hour loss. And then this is the current trade that I'm in right now with this trade. So I'm still sort of managing this one, and my stop loss is approximately down here for now. But I'm targeting, well, I've got a fixed exit at like 4.20. In terms of where I'm expecting price to go, parallel channel to that. There we go. There's a good chance it's going to come all the way up here to complete this larger pattern that we can see here with the Elliott waves. 1, 2, 4, 5. Hold on. 1, 2, 3, 4, 5. And this is to expand and just update it to the extreme high, such as here. It's a plan A exit, but most likely will respect the plan B exit. But this larger pattern obviously takes precedence, so there's a good chance it's going to come up here. But even if I go on a daily, it's just even more reasons to hold my long because of the larger pattern in play on the daily time frame. 1, 2, 3, 4, 5. So everything for me at the moment, Kiwi pairs, extremely clear, extremely bullish. And in terms of an entry, my next setup will be, a long again, if that comes. If not, it will take me out on 1R or whatever, but my TP is at a set 4.2R.
Nice.
Depending on the indicator and whatnot. And that's it. So yeah, nice little week for me last week.
Lovely.
Cool. That's fine. Cool. Has anyone got any questions?
I've got a few minutes of questions, guys. So if you want us to kind of review any charts for you, do any forecasting for you, then obviously pop it in the comments below. Those of you on Twitter, we've now worked out that you can actually comment because we've been and done it ourselves. So you've got no excuses now. Looks like I'm about to be taken out on Euro USD, sadly.
Yeah.
Yeah, really pushed down. But it's cool. That's break-even trade at the end of the day. It is what it is. Just hold and wait. Hold and wait.
Fair enough.
Where it goes. We haven't actually had a loss on any trade taken on the live stream yet, I don't think. I think we've had a couple of break-evens and 3 wins, but no losses, which is that's nice. Really nice.
Yeah, that's amazing, man. People should use that as a confluence if they're using a prop firm challenge. Just jump on our live streams, use your own analysis, and get involved with the trades. I'll do that. Absolutely. I used to do that back in the day. There used to be Forex gurus on YouTube. I used to do my own analysis, use them as a bias. It helps.
Yeah, definitely. There's so much information out there these days. As soon as you find a trader or traders who trade similarly to you, live streams are so good for getting that insight. ICT does one at the moment, doesn't he? I don't trade ICT, but I know a lot of people that do, and he's obviously doing these live streams almost every day, and you just get so much more of an insight of what goes through the trader's head during the trading day.
Absolutely. Well, I never covered DXY. Let me do DXY real quick.
Yeah, of course. What's next for the dollar? And we haven't done your dollar analysis.
Yeah. Okay, cool. So let me just share my screen real quick. Where are we at? at this stage. Boom. Okay. So 1, 2, 3, 4. We're in a bearish trend, but we do have this pattern that may overwrite this current EW4 move towards this point of interest. If we zoom out, the point of interest is actually right here. There's this major liquidity that happened on 14th of July, Friday the 14th of July, 2023. And that is likely to get hit. What's that? 99.56, whatever. That's what I'm targeting on the dollar. But before we even get to that, I would like to see something like this for the week. A stop hunt, preferably above this area of liquidity, that weekly high from last week, and then a short. Then I'm very confident in terms of direction of the dollar. Right now, the dollar's bearish, but the best setups are definitely going to happen above this liquidity or at least above this liquidity. So if I go to the current bias, yeah, we're actually in 1, 2, 3. It's an incomplete pattern, to be fair. It's an incomplete pattern. So 1, 2, 3. Yeah, it's an incomplete pattern. We're in the middle of an EW3 move, but it's very near this trend line. So what I like to see is two things. Fake out of this trend line, preferably below this liquidity, and then a rally to the upside, take out the liquidity over here, and then get involved in a short. That's what I would like to see. So short-term bullish strength followed by the trend. Now that's just one scenario. The other scenario would be if it just completely drops and now it just forms a new pattern such as this and then a drop to the downside. So if it can form a bearish pattern here with an EW5 within this larger pattern such as this, then I'll be very interested. 1, 2, 3, 4, 5, and just apply the same concept. Third tap, fake out of the pattern, and then we may get a larger move. There may be a larger fib high, fib low, fib entry above the 50%, more or less, as long as you've got your confirmation pattern, preferably with some liquidity here with a V. I'm referring to these areas of liquidity. I don't want to see this reduces the probability of the trade because that's no traffic. I want to see some liquidations. So some liquidations from around here, massive move, correction. That's one scenario. Preferably a fake out of this trend line, then a fake. There's so many probabilities. You just have to be in tune with the market. It's a probabilistic game. You only act when your checklist is fully there, right? That's my sort of game plan on the dollar. Once we do get, definitely bearish on the dollar as well. I definitely agree with that. But once we do get a trade, whether it's here or somewhere just above this area of liquidation, then yeah, my bias on the dollar, if I go to the daily, yeah, there's room to the downside towards this area. We're gonna get a reaction from there, but then we also have this larger pattern in play, right? 1, 2, 3, 4. There's a lot of room to the downside. So dollar's 100% bearish. You just have to be prepared that we may get sometime in October a pullback, right? So change your bias short term, a pullback, and just apply the same concept again. Trend line, third tap trend line fake out, confirmations, liquidations, daily high, low, previous sessions, and you just look for the fake out of the third tap, and then you get involved with the short. Obviously, with this trend line fake out, potentially, these are the kind of trends I will not trade on the main conservative account because it's going against the trend. I'll take that on a separate account, right? So I'll just take the week off on the conservative master account, just let the market come to me, right? So I'm definitely, I'm bearish on the dollar. So crystal clear. So crystal clear. We've got even this trend line as a target as well. But then obviously once price does go there, and if it goes in, then I'll be re-updating the areas of liquidity on the left-hand side. So yeah, that's it for me for now. So yeah, I agree with you, Chris. I'm also bearish on the dollar.
Nice. Lawrence, that's a really good question. So just to answer this, so I'll read it because I don't think it's all. Oh no, okay. So do you guys ever consider higher time frame candles? How higher time frame candles are forming? For example, if bullish candles open without a bottom wick, from what I see, it's likely the price will come and make a bottom. So yeah, definitely, I'm looking for that liquidity. I think what you've got to do is you've got to take into account both, because liquidity itself is an area where orders have been filled, and that's what it is ultimately. So it's not necessarily the candles themselves that I'm concerned about. It's whether or not there is a liquidity move. So the timing could be off of the candles, and depending on whether you're looking, you might be looking at a 3.5 hour candle or a 4.8 hour candle, and it could look completely different. So I do get what you're saying. I think if you had two candles, so if you go to, are you on the 4 hour chart?
No, H1. Let me go on H1 now.
H4 now. 4 hour chart and just zoom in for me.
Yeah. This is H4 on DXY though.
So yeah, so if I'm looking at those candles now, that an indicator that's creating that wick on the 4 hour bearish candle.
What about
on your 4 hour bearish candle? I can't see.
Yeah. This one here, yeah.
Yeah, is that an indicator that's created that wick, or is that wick actually there on the DXY?
No, that's a wick. That's a wick.
Other side.
This.
The other side of the candle. Because on mine, it doesn't have that wick. See what I mean? Yeah, I don't think it has that wick. I think that's your indicators to creating that.
Okay.
Yeah. So my chart, it doesn't have that wick there. So I get your point, Lawrence. So if you look at the DXY, you look at Euro USD. The bearish candle on DXY doesn't have the top wick. You are absolutely right. But for me, that's not a concern because the previous candle does have a wick. So it's, if you look at the context of the liquidity has been taken. It's taken liquidity from that, 4 hour candle to the left, which is obviously, a significant zone because it's caused a nice reaction. So, I'm not concerned that the bearish candle, the fact that it doesn't have a wick. Where I would be concerned is if both of them didn't have wicks. If both of them didn't have wicks, I'll just show my chart quickly. If both of them didn't have wicks, then that's where it would be a problem. So if I'm looking at my pair here, right? Let's say that wick there wasn't there, okay? And these were both like, flat bottoms with no wicks, then yeah, definitely that could be, a strong contender for an area of liquidity that can be taken. So it really is dependent on the pattern itself, and it's sorry, not the pattern, dependent on the move itself and what that move has ultimately done. So for me, when I look at this, I'm looking at the fact that it's taken out liquidity here. I'm looking at the fact that on the 1 hour time frame, it's tagged into that imbalance. Okay, and it's taking liquidity from there, and then it's given me my classic kind of news reversal setup. So I'm pretty comfortable with that that is the liquidity that it needed to take. If both of my candles were flat bottomed, then yeah, I think you're right. That's an area that you could see as liquidity. I am always paying attention to 4 hour candles. 4 hour liquidity is really important to my trading. Some of my best trades come from 4 hour sweeps. When you're looking at areas like this where you've got multiple candles being taken out, and even for the smaller pullbacks, this is another good example of the point you're making. So we've got the wick there that's taken out liquidity, and the push down. And remember, on another time frame, everything in this section would be a wick as well. Everything in that section will be a wick as well. So just bear that in mind, is that you've had this push up and then a pull back. That whole section there would be a wick on maybe like, sometimes if you look at like the 6 hour time frame, 8 hour time frame. Yeah, see? Okay, so that whole section's now a wick. So it's really dependent on what the move has actually done. That's what's important, is in what has that move done? Has it taken liquidity from a particular area? And then once the liquidity's been taken, the next steps are really, do you get a setup from there? So liquidity for me isn't a signal for me to get in. if it was, then I'll be entering every time we get a liquidity sweep. Liquidity sweep is just a signal for me to start looking for trades. And once I have a liquidity sweep, I'm then looking for structure. And if I get my structure like I did on this one, I get my structure, I can then get into the trade ultimately. So liquidity for me is just the first thing that I ultimately need. Once I've had my liquidity swept, from there, it's just a case of, waiting for a setup in line with, other narrative that I have ongoing at the moment. So, that for me, the liquidity sweep is, whilst it is the most important part of my trading, it's the least important part of my actual trade itself, if that makes sense. I know it's kind of confusing, but for me, I'm waiting for the liquidity to be taken first. Once it has, I then need a setup. So I'm not just trading if I have the liquidity swept. So, whether that 4-hour candle pattern matters or not, to me is slightly irrelevant, because if it does come back down, take out that liquidity, then I'll potentially look for an entry on there. But for me, on those moves on DXY and EU that you're referring to, I feel like they've taken liquidity with the previous candle, and the bearish candle or the bullish candle that we're seeing now on the 4-hour is just a result of the liquidity that's been taken by that news move. Hope that makes sense.
Yeah, no, it does. And also what I think as well is, when there's like a big range after a liquidation hunt, it normally takes a while for the other side to get filled. If I briefly just go on DXY real quick, and then we can start wrapping things up soon. DXY, where we are. So this is the H4, obviously. But if you look at this candlestick, this one right here, we can see we've got a low there and we've got a high there, and the next candle obviously blasted through that high, so it liquidated the low and then it shot up. If you update your liquidations and the range, now you've got a really massive range. So this normally indicates it's going to take a while for one side of the range to get taken out. So I will see that as I'll just wait in terms of personally my strategy. So with Elliott waves, if we've got 1, 2, 3, 4, 5, go to the H1, we've got your H4 range, then this is not really tradable, right? For me, I'll be looking at a trade up here above that liquidation. But even if I were to take a trade outside of this H4 range, that I'll have to be careful because of the trend line and the Elliott wave that we're in. Right? I'll have to be careful. If I were to take a trade below here, again, I'll have to be careful. We're still within that H4 range. I would preferably like to take a long here. That would make sense to me, because then I'm outside of danger. Liquidation's been taken out, and I'm with the trend of the Elliott wave. There'll be an Elliott wave 4 here, approximately. And if price were to reverse from here, then this would be even better, because then by the time it targets this trend line, what's here? There's an unfilled liquidation, so that's very likely going to get filled, right? We already know if we go to that extreme high, right? That extreme high, where is the extreme low at the time before a pullback? It was actually here. This was, this is where it found a low. It found a support. So taking a trade here within this range, it just doesn't make sense until one side gets taken out. And, that happened here. There we go. That's been taken out. So what is likely going to happen? It's likely going to retest this area here, which coincides with the potential short that I'm anticipating. But right now, this is just not tradable for me. So right. It all kind of just depends, to be fair. Yeah.
Nice. Well, I think that's the lot for today, guys. Thank you for those of you who jumped on. Chris, Linny, good to see you. Lawrence, good to see you as well. Thank you to those of you who jumped on in the chat as well. Again, guys, we do these sessions every Monday. We want you to come primed and ready with your questions. So, we can answer them for you. That's what we're here for. We're here for your help and advice. With the same kind of few faces every single week, which is great. And we love seeing you guys, and you guys are the heart and the soul of this podcast, which is amazing. But those of you who are sat in the background, not sure what to kind of say, look, you're here because you're on a journey, right? You're learning to trade. You're trying to find a way to get out of whatever it is that you're doing that you would rather not be doing. That's what most people ultimately are here for, right? So you've got questions, you've got struggles. Unless you are currently, making it as a trader, well done you. You've obviously been through all the struggles in the past. Those of you who are not there yet and are still working full time, like Lawrence, who's doing this, whilst he's at work at the moment, come prepared and loaded with your questions, because we're here to help you. This is something that Diego and I, we have nearly 20 years, if not 20 years experience between us, specifically in trading Forex pairs. So if you have any questions or you have any queries, then please reach out to us. And as always, you can reach us on our Instagrams as well. So I'll put mine in the chat and Diego can put his in the chat. You can reach out to us anytime on there as well, and go from there.
Yeah, absolutely. And also, just don't forget to repost, right? I think from next week, what you guys can do is just repost this X space, this live stream, and in return, right, mutual benefit, in return, we'll help you with your analysis to help you get funded. So if you're in a trade, if you're in a Euro USD trade and you're not sure what to do, or you're planning to take a trade in a certain area, what better person to ask than Chris and myself, right, to help you with your Euro analysis? Because imagine if you're taking a trade, or just imagine you're planning a Euro trade, just an example, or even a NASDAQ. I know a lot of you guys like indices or whatever, but if you're looking for a point of interest and you've got your game plan, you've got your checklist, but then at the back of your head, you've got Chris saying, nah, it's coming here. Or Diego confirming, yeah, it's going to go to this area. What's this going to do? It's going to save you a potential loss. This is the value of these live streams. So in return, repost the damn X space, and then we'll help you with your analysis, right? It's a win-win for everyone.
I love it. I love it.
Yeah, let me pick it.
Right, so same time next week, guys, 12:30, next Monday. We'll see you there. We'll be reviewing the week as it happened. We'll be reviewing the week coming up. Hopefully that's giving you some good, clear direction, especially on the dollar. What's next for the dollar? Long story short, we expect the dollar to go short. There's not really much else to say other than that. That doesn't mean just short it, willy-nilly. Okay, be cautious with your trades and make sure you're shorting it in the right way, waiting for your setups. But long term, you probably can't go too wrong. Shorting the dollar at the moment is the takeaway from today, right?
Absolutely.
All right.
So yeah, we'll wrap things up. Nice session, Chris. Man. Nice
yeah,
session.
Man. Loved it. I'll catch you soon.
As always, take care, everyone. Have a good
All right.
week.
Hey, guys.
See ya.